$1.20 for 2021. So, you know, put a 15-20p ratio on that, and you could get up to the $15-20 range, maybe higher if gold gets up to 2,000 or something like that. There is some coronavirus risks. Some of the mines, their employees aren't working, so that is an issue. And they do have some, what I call geographical risks. They do have a big mine in Canada, which is okay, but they have a mine in Kyrgyzstan, I don't know if I'm saying that right, which is an old Soviet Union republic, so there could be some issues there. But overall, there's one gold play that hopefully I can do okay on. And there's always another way to do this and just buy a gold ETF. But if we look at, should quickly, so if I bring up the weekly on this, you can see back in 2009 I was sitting down around $2, and we had that rally in gold after and went up to $22. So that was like a tenfold increase over 1, 2, 3 years. And we did have this sell-off here. I think this was something to do with water rights with one of their mines, but it has recovered a bit. So I mean, we could see this go up 100–200%, depending on gold prices. Like I said, gold prices, you can see here, spot price is peaked back in 2012. We got up to like the 18, almost approaching 2,000, and then after the financial crash, we had this very strong run, which could repeat itself from $700 all the way up to $900. So several fold. And recently we've seen a move from 1,100 up to just under 1,700. So I'd like to see this move through 1,700 and then up to 2,000. And then depending, hopefully if they can get their workers not back to mining, could see a pretty good rally in that stock. I did add to my short positions. I've mentioned them before, but I added to one which is American Tower, which is just cell phone towers in the United States. And again, it's had this huge run from $26 up to $260, almost 10 times. But this and SBA Communications, looking at their balance sheets, they have huge amounts of debt. And that debt is coming up over the next year or 2 or 3. And I've shown in my previous video what corporate bond yields have already gone up to like 4, 5, 6%. And if this gets dropped down to junk rating, then they could be refinancing all this debt that they were getting at 2 or 3% at maybe 7, 8, 9, 10%, and that will just crush their earnings. One of these companies also has a negative balance sheet. I think it's SBA Communications. So I just added those, very small amount. They were on, that's the weekly chart, but on the daily chart they're showing some technical breakdown. So that's AMT, and the other one is SBAC, which I'll put the notes in the video. Again, this one is broken down a fair bit. And again, it had a run of about 10 times, 15 times actually. Again, just balance sheet loaded up with debt. So just a bit of a bet against these on higher interest refinancing. And the other ones, short positions I've talked about in the past, and I continue to hold them. I did get squeezed a bit on that rally, 15% on the upside. So, but I will increase these as the market continues to go down. Of course, I got to be a little bit concerned if one day they just come up with a virus I'm in a vaccine for the virus, the markets could just shoot up 15-20% in one day, and of course that would go against me. But my long positions would benefit the long positions I have mostly in safe assets, utilities, which I've talked about, which I'm not buying anymore, but I haven't really sold any either. I did take a small gain, cut my position on agrarian, which I mentioned, the fertilizer, just because it rallied pretty quick and there was a chance to lock in a small capital gain. So that's kind of it for this week, and I'll try to get another video out for next week, just again following all these different metrics.